Good morning. My name is Don Vivrette, and now that we're ending the season, I'm learning how to use this. This is financial and estate literacy. This is It's Your Estate. We're doing estate administration, and this is the last week, which is probably good, or I won't remember to log in next week. Anyway, so welcome all of you, and Trevor is going to help Pete get through this, or the other way around. I'm not sure which. I will keep an eye on the Q&A function and ask questions as we go, and annoy them by asking the questions along the way, or hold them until the end, or answer them myself. So you guys have a good time, and I will be back as needed.
Okay. Thank you, Don. Morning, Trev. How are you doing?
I'm doing great, Pete. How are you?
Really good. This is going to be the last session. So, and we're going to be talking about administration. Why don't you go ahead and bring up your Ask First form? And for full disclosure, I am also a professional fiduciary, and I am with the group that Trevor is with the Professional Fiduciary Services, which is basically a DB doing business as for our group. And Trevor has gone to our website, where, just to remind you, it's IYME is a .org is a great way to find it. And we have a lot of articles, and the outline that we're going to be using today is on there. One of the things that we hope that you will do is to share this outline and this conversation that we're going to have today, whomever you have chosen to be your estate administrator. And we're going to try to help you, because we know that's what most of you are going to be doing. Hopefully, after this session, you can have a good conversation with them to see whether or not they're the appropriate individual, or that if they want to do it. You have a master's or other advanced degree. What is that in there, Trevor?
Okay, well, I got my bachelor's degree in economics from UC Berkeley. And then some years later, after some international experience, I have my master's in foreign service from Georgetown University in DC.
So you have a little bit of a diplomacy background as far as your education is concerned.
Yes, that helps. That helps with the family conflicts, and I specialize in sort of neutralizing those sort of situations and trying to get things done.
Yeah, so it's amazing to me that there really isn't a credential in this area. But how many years of relevant experience do you have?
I have been, well, Pete, I mean, just being associated with you, I did the math. I've been helping with the workshops for about 10 years now, and a little over 10 years. And then actually got my licensing 9 years ago for my professional fiduciary license from California.
So there is a license. Talk a little bit about that.
Sure. We have slides on it, but I don't know if we'll get it because they're at the end. But everyone on our outline, you can look at these. But essentially, the state of California, which is kind of on the vanguard of licensing individuals to serve as in fiduciary positions. And hopefully by now you understand what those positions are, meaning mainly, successor trustee, agent for power of attorney, agent for advance healthcare directive, executor or administrator of a will. So our state licenses individuals to serve in those positions as an alternative to a family member, friend, or let's say a corporate trust company. So in order to get licensed, there's many steps. First and foremost, a very complete background check to make sure that there's no criminals doing this job, because you really are in command and control of lots of different people's monies and assets. You have to take two exams. One is national in scope, which covers kind of conservatorships and guardianships and those sorts of topics. And then the other is more on our California state probate code and trust administration here. I think you have to have at least a college degree or many years in this field and experience. You have to have professional recommendations. Trying to think.
The good news about licensing is that you can look you up and to see whether or not you have any issues, and you a beneficiary or someone in the family, if they don't like you or they feel that there's something wrong, has a board to complain to. So
yes, yeah, and I put it there. It's a little scratch there. I'm sorry, it should be typed in, but it's in my chicken scratch handwriting. But there is a professional fiduciary bureau, much like your dentist or your CPA. All of them have a bureau which holds a license, and so there is some consumer recourse if there's any issues that you may have with a fiduciary. That fiduciary also has to disclose any sort of if they've been removed by the court in any cases, that should all be disclosed on their on the website there. And so if for example the let's say beneficiaries thought I was breaching my duties, I wasn't communicating with them, I wasn't giving accountings or this or that, they could reach out to the Professional Fiduciary Bureau in Sacramento, and then that bureau will investigate the situation.
And could have your license removed. So
yeah, we don't want that.
We don't want that. But just like every, for financial planners, for CPAs, for attorneys, please, you've got to look people up. There's approximately over 1,000 individuals now licensed in the state of California. There's probably 75 to 85 licensed fiduciaries here in Orange County, just to give you kind of a brief overview as to the number of individuals that are in the field. Is it ethical for you to pay an attorney to have them hire you?
No, that would be like a quid pro quo.
Yes.
Yeah. No, that would be unethical. But having said that, Pete, most of our work, as you know, do come from estate planning attorneys, elder law attorneys. Usually when someone has identified a situation where a professional fiduciary would be appropriate in that situation. We don't put documents in front of clients and say sign this power of attorney, or everything goes through their attorneys.
You will not be able to hire us directly. You would have to go through your legal counsel, and hopefully your legal counsel would check out the professional to make sure that they're above board. Business relationship, we're going to explain what a fiduciary is in a little bit, but let's how do you charge?
Okay, so every fiduciary has a fee schedule. They just passed a law this year, or went into effect this year, where every California licensed professional fiduciary that has a website presence is required to post their fee schedule on their website. So you could now even have more opportunity to look and analyze the fee schedules. But basically, I'll give sort of a overview of how we charge and how I charge. Essentially, if I come in during your lifetime when you're incapacitated, let's say, as a power of attorney or an agent for a healthcare directive, I would charge an hourly fee. My current hourly fee is $225 an hour. Now, however, if I come in to manage or administrate an irrevocable trust, for example, that would be after someone dies, usually, not always, but usually, then I would charge a management fee. It's a percentage fee of the assets titled in the trust when that trust became irrevocable, which usually is date of death. And then I charge, that's a prorated annual fee until final distribution.
So the cost of dying is somewhere between 3 to 5% of your total estate value. Usually a professional can reduce some of that cost, but they need to get paid. So, but every professional fiduciary has a fee schedule. And so before you hire one, make sure you understand how you will be charged. We talk about during life. Most times people think about estate planning as estate administration after death. What happens during a lifetime? What do you do for folks?
We have a slide on that, but look, whatever it takes, Pete. So a lot of that is, let's say you've become incapacitated and now I would need to step into your shoes to help manage your financial affairs, perhaps get together with a care manager and manage and set up a care management plan and set up a budget and pay for all this, and also work with the family if needed to execute that plan. But I'd have to get the client to doctor's appointments. I'd have to manage their real estate assets, whether that's their residence.
You become their financial parent. You really step into their shoes and do everything from paying cable, telephone, grocery shopping. It's literally you're there as their advocate.
Exactly. And you don't necessarily do everything. Like I'm not.
You hire people.
Yeah. So you're almost like a CEO. You don't do everything, but you have to make sure everything gets done. Yeah. And so that requires a lot of delegating to proper professionals that are vetted and that are very good in whatever field you need, whatever services you may need for your client. So part of being a fiduciary is having that vetted network of professionals that we can call on, because every case is different. It's not a uniform, no. Not everyone's the same. So
no, not at all. The website of professional fiduciary services is trustypro.com. And let's get into your presentation. I will be joining Trevor. A little background on me is that I've been doing this for approximately 30 plus years. Trevor is about 20 plus years younger than I am. And so even 25 years younger than I am. And all of our individuals in our group are what's called independent contractors because we're not a trust company. So, and we'll explain a little bit more on that as we go through the presentation. So let's go to your first slide.
Okay, so remember, just a reminder, if you guys have gone through this through the It's Your Estate series, there's fiduciary positions that are linked to every document that you will create. So your will and your trust and your durable power of attorney and your healthcare directive will have a fiduciary position and a name for that position in the documents. And so part of creating your documents is really choosing who you're going to pick. Now, and we haven't said this, Pete, but we always do. This session is not a scare session to get you to run to a professional. This session is tailored more for you to pick. Most of you are going to be using family members. So this is to help you kind of understand the job and what they're going to do so you can choose the right person, hopefully in succession, because we don't. Pete, why don't we like co? I mean, just for general speak.
To co is because you have to, two people have to agree on a particular direction, and having a difference of opinion as to a direction does not mean that one is wrong. We discourage you from doing co because it just usually ends up in an argument or in fight, and that's the exact thing you don't want.
Yeah. So when it says 2 to 3 people or 2 to 4, that really means in succession, not as a and I should probably put that, but that's what I mean by succession. Now, we're not going to get into it too much, but as a successor trustee, you can use people, friends, family, or professional fiduciary, or you could use a trust company, which is the only company that can be a fiduciary in your estate plan. Pete, do you have anything to speak about trust companies and where they're,
Well,
maybe?
the positive thing about it, using a trust company is that trust companies don't die. They're and the employees within the trust company are always going to be there. So that's one. Two is that if you have a $20 to $50 million estate, that is in businesses in multiple countries, trust companies have the wherewithal to deal with that. For smaller estates, 20 million or less, the negative is you have a corporation dealing with your family, and you have employees of that corporation that are responsible. So you could have a good employee within the company, or you can have a lousy employee with the company. But there are corporate employees. I've worked for 2 different trust companies, and the primary motivation is revenue, and the second is not to get sued. And so lots of committee meetings as to before you make decisions on behalf of the family. If Trevor has to make a decision, he has a meeting with himself to see what the best solution is, and or he'll check with some of the other partners and just see as to what is the best strategy. So that's kind of the thumbnail as to trust company versus an individual. You can name your attorney as your successor trustee. I would not advise that. You could name your CPA as your trustee. Again, I would not advise that. They don't do this on a full-time basis. I would pick out a professional, and I would at least interview at least 3 individuals, because you want to make sure you look them in the eye, get to know them a little bit, and understand their character. Are they just doing this for the money, or do they actually have a background and have some empathy and in helping people? So because this is all about family and people.
Yes, interrupting. Will a trust company be my agent for my healthcare?
No trust company will do that. We will do that.
Thank you.
If we are also involved in your other documents. Some trust companies will not do a durable power of attorney. Others will. So, and each trust company has a little bit of a different personality. And remember, the person that you are speaking to will not be the person who will actually do the administration of your trust. The person that you're going to be speaking to is basically the salesperson for that trust company. But they're not going to be doing the nitty-gritty from incapacity or at your death.
Yeah, there's a lot of people, at least from the feedback I get from people that have had experience with corporate trust companies, is there's a lot of corporate policy and things like that get in the way of being able to be nimble and make decisions quickly. And it's kind of, and also the turnover. So you, like Pete said, you may have a great person that you started with, and then they move away, and then a new person steps into their shoes, and it's not the same. It's, so the advantage of using us is we're, who you talk to when you're setting it up is who's going to be there executing it when it's done.
Yeah. One of the things that we like about our group too is that we're all independent contractors, but we try to name each other as successors so that there's some continuity in the plan.
Yeah, so we don't share revenue or income from any case. But we will serve as each other's successors in case the person in front of us retires or passes away or something. We could step in quite easily.
Yes.
Okay, so this slide we'll go over quickly, but I wanted to get an idea, kind of understand, because we've been talking about, or you've been talking about during this series, like, living trusts and setting it up. Most of the time when you create a revocable living trust, you're going to check all the boxes of this particular contract you're making with yourself. So, or you and your spouse. So when you're alive and kicking, you're the grantor, you created that trust, you're the beneficiary of all the assets in that trust, and you're the trustee, you're managing those assets. Now, for 99.9% of your life, probably that's really going to be the setup. There's not going to be much. You're going to fund the trust, you're going to title the assets in there, but for everything else, it's just life goes on. Now, let's say you become incapacitated. Well, you're still the grantor and you're still the beneficiary of those assets. But what's nice about a trust and a successor trustee is it also is an incapacity document where your successor trustee can step in during your lifetime and manage those assets for your benefit. And that's what the plan should be. You should not have someone that is only concerned about the amount of inheritance they will get if they don't spend money on you, taking care of you. And then when you're dead, you're still the grantor, but you're no longer the beneficiary. That pivots to we look at the dispositive provisions in your trust, and then they become the beneficiaries that your now successor trustees has fiduciary duties and responsibilities towards. But back to incapacity, and then we'll move on. It's very important to understand that when you choose your successor trustee, and you got to think about this today, this person, if you become incapacitated, they're going to determine where you live. They're going to pay your bills. They're going to take you to medical appointments, or at least arrange for that. They're going to control your investments and your monies. They're going to prepare and file your income tax returns. Not only all that, but most likely they are going to be responsible for communicating the situation and the status quo to the rest of the family and interested parties.
And if you don't have anyone, then what happens is that you go into a conservatorship, and that's something that you just don't want to do. Yeah,
that's here in the red for warning. If you don't have anything in place and you become incapacitated, then you may end up in a conservatorship of the person or the conservatorship of the estate, or both.
Yeah.
So,
and a trust. So if you're single, please remember that. And that's why it's really important if you're married and the first spouse dies, really take a hard look at this this presentation again, because now you're single. You need that successor trustee to be there for you.
Yeah, and it's best to choose that now when you have clarity and you're calm and you can make good decisions, rather than in a rush when things are sliding downhill fast.
Yeah.
So, okay, well, let's talk a little bit about what makes a good one. Now, none of us are perfect. You don't have to be good at or have all these qualities to be a good trustee, but these are just some of the things to consider. When you're choosing a family member, who has the time. Yeah.
I'm just recently been named in a trust where the family has 3 sons. All of them don't have the time. One is a CEO of a corporation, highly intelligent, could do the job, but they wouldn't have the time available to them. So that's one of the things you need to ask whoever you name. Do you have the time that it takes to be a fiduciary? It's not a bad idea to ask the professional as well. If you're going to name a professional, how many clients do you have? What kind of support team do you have? It takes time. Being on the telephone with a credit card company could take an hour. With Social Security, it could take 2 hours. It's tedious, and sometimes you don't get it on the first try.
No, and there's a lot of different things that take a lot of time. I mean, real property, it takes a lot of time to deal with, if there's issues there. You just do you have the availability to basically stop your life and deal with this, let's say, for 3 or 4 weeks, and then get back on your, back to your life. It's hard to juggle if you can't.
Yeah, and one of the greatest period of time is that first year, and we have a term called marshaling. What does that mean, Trevor?
Well, marshaling is when you would, well, in the case of marshaling assets, financial assets, that would be when you would take the proper legal documents to the financial institutions and financial custodians and present them with the death certificate, trust certificate, and new EIN number, which is now your irrevocable trust, your new tax ID number. And you have to go through their legal department to transfer the trust assets from the decedent's Social Security number linked to that to the new account that is now in the new tax ID number. So when we say marshal, we marshal the assets for that.
Yeah, but again, you have to do it in person.
Yeah. You can't send somebody.
You can't send somebody else, and it takes time, and it does. Sometimes it could take up to 45 minutes, and I've had some take 3 months. Or longer. So you got to take the time to do it. Talk about desire. What I see from family members is that, gosh, I love all my kids. If I don't name one, they're going to think that I don't love them, or I think less of them.
Oh, that's when you're starting to think that you being your trustee is a position of honor, which is not. It's people will do them for you, but it's an administrative chore. I mean, let's be serious with the tasks you have to do. So they'll do them for you, perhaps if you talk to them and if they seem like they don't really want to do it, man, it's not really worth it perhaps to name them, because they don't want to do it. And then, often people will name somebody and not even tell them that they're named. And that's even worse, because you never even had the conversation.
Yeah. And maybe sometimes if you, one of your kids that you approached to name, and they know a little bit more about their siblings than you do, and they don't want to put themselves into that position. So of a potential conflict. So really talk to them and say, hey, do you have the time? Do you have desire to be and learn a little bit about this? You can't go into this thing cold. Proximity, what does that mean?
That means being nearby to the grantor, the person that is that may need help, or even after they pass away. It's not an easy job to do if you don't live nearby. And especially if you live through a period of incapacity, doing a lot of those things on the previous slide where you have to take care of so many things for that person, that's hard to do, because you're not able to check in and sort of oversee the whole situation as well. And so, and then even after you pass away, especially if you have real property assets and things like that, part of your duties is to get in there and secure the assets, make sure that everything's okay. And if you're living in another state or even upstate, that's very hard to do.
Yeah. So yeah, I would pick the family member who lives closest to you, and hopefully it's somewhat competent, but proximity is huge, especially during incapacity. Organization, what does that mean?
Well, and this goes with the other side of the block there, excellent record keeping, but look, to be a trustee, you're going to be asked to, you're serving in a fiduciary position. Therefore, you're going to be asked to take care of things in a manner that has a higher standard than, let's say, if you were doing it for yourself.
Because when you do something like this, you don't own the property, correct, Trevor?
Correct. Yeah. No,
and the family member doesn't own the property.
No,
And the grantor is deceased or incapacitated, so they don't have control of the property.
no, it's in this strange limbo, because a lot of beneficiaries, for example, think after let's say their mom dies and they're the heirs, they're going to get the property. It's not theirs
No.
yet. It's only theirs once it's distributed. In the meantime, it's in an irrevocable trust. And so when you're bookkeeping or bill paying or taking care of certain things, you need to be organized, because at the end of this whole road, before you even distribute the money, you're going to have to do a final accounting, and you're going to have to give that to everybody. And if you weren't organized along the way, that final accounting is going to be very difficult to prepare. Even if you have someone else prepare it, you're going to have to keep trying. I mean, Pete and I have stepped onto cases where we've had to do an accounting from a previous, let's say we took over a previous family member trustee who was not organized, and just trying to piece together all the different bank statements and what you spent, this and that, it can really derail a trust administration.
Yeah. So the ability to delegate. Who do we delegate stuff to?
We delegate stuff to all sorts of people.
Legal?
Legal, tax work, even bookkeeping, maybe, if you're not good at that. See, when I say ability, I mean that you know yourself. You know thyself as a trustee and your limitations. And, like I said, not all of us are good at everything. So but people think that if they do it themselves, they're going to save money because we're not hiring professional services. Therefore, everyone's going to, they'll be the hero at Christmas time. I don't know why they think that, but they're just kind of cost sensitive into legal services because they're not used to paying for that, or CPA services or things like that. And therefore they don't delegate it. They try to do it themselves. They do it incorrectly. And then it ends up being a bigger problem down the road.
Yeah. Ability to delegate from landscapers, gardeners, construction individuals, real estate agent, appraisers, attorneys, accountants, financial advisors, care
managers.
Caregivers, auctioneers, it just goes on. You can't do it all yourself. You have to delegate. In fact, I would say if you ever need a referral to someone, ask a professional fiduciary or ask somebody in a trust company, because usually what we try to do is work with individuals who really provide good value, that that they're honest, they do the job that they say they're going to do. And that's one of the advantages of hiring somebody who's a professional.
Yeah. And one of the things I want to say to that before I move on is, just because you've delegated the task, it doesn't mean that you're off the hook for getting that task done. The probate code says that you're supposed to prudently delegate these matters, property management, for example. That's a big one people try to do themselves. You prudently delegate that. And then you still are on the hook to independently monitor what they're doing.
Yeah.
So, because in California, the way that our probate codes work is you do have, and it says there on the below, it says that the executor, administrator, or trustee is personally liable for all actions taken or not taken during the administration.
Yeah.
Not just the actions you took, but also the actions that you've delegated out.
I would say the next, communicate, transparency, and a presence. I think those three things are so important, because at a time of incapacity or death, everybody is a little bit on edge. You know, family issues come to the surface, in-laws or outlaws start coming to the surface. Everybody's questioning how much is in the estate. We're dealing with money now. What's going to happen to the money? And so how important is it to be communicative, transparent, and have a presence?
Well, it's just, you know, that really can determine the tone of the administration, in the sense where, you know, being able to get, because part of this, I mean, it's right there in the name. I mean, you need to get people's trust that you are going to be effective, and that your course of action, you know, that you've determined that you're going to take is the right one. But you have to communicate that to other people. I mean, there's a legal term called pillow talk, and that's where the spouses, the outlaws, in-laws, you know, they'll sit there and they'll be like, you know, your brother, who's the trustee of your mom's trust, I mean, we haven't heard from him in a while. Surely he should have had the house on the market by now. You know, what about all the personal so they get in the ear, and then, you know, there's that whole thing starts to kind of snowball, and it can become a problem. But if you get out in front of it and you communicate in advance what's going on, even if it's in writing or picking up the phone. A lot of people nowadays hate calling people. They don't like to talk. It's like they're scared of the phone. So, you know, just kind of just keeping them, and it keeps them comfortable. So it does help provide a good presence where they trust that you know what you're doing.
Yeah.
So yeah, and being transparent. Look, everything is transparent in administration to the beneficiaries. Okay, there should not be
any secrets.
Any secrets. There's no BS or secrets that should be there. Financially and you know, just generally speaking.
Yeah. Bondable, I would say, is being bondable. In other words, you don't want to name one of your kids who has a bankruptcy or has credit card problems. You know, bondable just basically means that if the trustee runs off with the money, the bond company is there to replace the money. But most people, 90%, 95% waive the bond. It's an extra 1% per year to have a bond. And, you know, that's usually too expensive.
Yeah. And that's usually there in
court cases.
Like court cases or like probate or intestate administration. Often we are forced to get bonds if we're not named in the documents and we've come in through the courts. But but you would want to be bondable. That just means you really just have good credit and no shady issues in the background regarding money.
Yeah. And I would say competent, excellent record keeping and efficiency, they kind of go together. You know, look at your kids, if you have more than one, realistically, and say, who is the competent one, who is a little bit anal and keeps good records, who can be somewhat efficient. These are kind of the issues that make a good fiduciary. Personal liability, you want to talk just a second on that?
Yeah, I mean, I think people, you know, when they take these positions, they agree to serve in these positions, I think often they don't understand fully the liability that and responsibility they're taking on. Because fiduciary liability and regular liability are completely different things. So if I let's say I had a beneficiary, or let's say I had someone like Pete who accused me of stealing something from him. Well, he'd have to prove that I stole it. The burden of proof is on him. But if Pete is a beneficiary of a trust, and he said and he accuses me of, let's say, mismanaging the funds or doing something shady, I'd have to prove that I didn't do it. That's the difference between
The burden of proof.
The burden of proof. So you're often, that's why, good record keeping and all those sort of things are so important, because you never know when you're going to be asked for something.
Yeah.
Hey, what do we have here? What do we have here? So it's just something that, that you should probably talk to your successor trustee and help them understand that.
Yeah. The next slide is going to be the duties per the probate court. Just because we're not in court going through probate, these are the rules that a trustee must follow, and else you are what we call in breach of your fiduciary duty, and you don't want to do that. So the duty to administrator, duty to follow the written instructions in your trust agreement, being loyal to the beneficiaries. That seems kind of odd? Aren't you always working for your beneficiaries?
Well, not if you're named, let's say, successor trustee, and then you can't stand your sister, who's also a beneficiary. See, I think a lot of these, being impartial or being loyal to the beneficiaries, is very difficult in families where the beneficiaries themselves there's acrimony between them, and one of the beneficiaries is also the trustee, because you're already baking in a conflict of interest there. So that family member trustee / beneficiary has to be able to follow these codes when serving, and not just be loyal to themselves, or let's say they're impartial to certain beneficiaries, but others they aren't giving them the same sort of treatment. That does not make a good trustee, and you could be breaching these probate codes, which can have consequences.
Yeah. What most of the problems come in if you have more than one child. If you have one child, then who's going to complain?
They can screw themselves over if they want.
There's nobody to complain. But if you have more than one child, then you got somebody out there. If they don't get along, these are the duties they're going to look at to make sure that whoever you name follows them, follows all those rules. And that's why it's really important, whoever you name as trustee, incapacity or your death, one of the first things they do is to hire legal counsel, to represent them, to make sure that they don't break these rules.
Yeah, because if you have a disgruntled beneficiary who is either litigious or just complains a lot, if they go to an attorney themselves to complain, the attorney, the litigating attorneys in this field of law, they'll have these list of these probate codes in front of them and ask specific questions. Did you get an accounting within a year? Did you
set up a separate account for the trust property?
Yeah. Did you collect rent from the person that's, let's say the family member that's living in the rental property at the time? They'll have a checklist that they can find one of these codes that you're breaching. So
When's the last time you received any information from the trustee?
yeah.
You know, so these codes are really important, and this is the rules that you go by. Let's go to the next slide.
Okay, so now we're kind of getting into side by side with, because we, estate administration and trust administration generally is the same work. The difference is that in an estate administration, you are, you're administering the estate, you're marshaling assets, you're selling assets, you're distributing assets, but it's all supervised through the probate court. And so there's roadblocks along the way to make sure everything's on track. In a trust administration, it's the same work. The difference is it's administered privately. So there is no court supervision.
And
now that,
and since there is no court supervision, there are certain rules, and one of them is the 120-day notice. What does that mean?
Okay, the 120-day notice is so when someone dies and the trust
becomes incapacitated.
Yeah, I suppose you can do it when the incapacity. It's basically when a trust becomes irrevocable.
Correct.
That the trustee has 60 days, according to our code, to send out what's called the 120-day notice, which is it basically informs all the beneficiaries of the trust, or anyone named in the trust, or any immediate heir at law in the, that's maybe not named in the trust, that this trust is now irrevocable. Here is the contact information for the office of trustee. Here is the trustee. And then it also comes with a big warning that has to be word for word in a specific font in bold that says you have 120 days to contest or, file a petition with the court to say this is the wrong trust, or this is invalid, or whatever it may be. After that 120 days is done, you cannot come back and contest. So you want to start that clock as soon as possible. And therefore, if there are issues, they get flushed out early and not down the line. Because if you don't send that out, it's 3 years or something. 3 years, I think, the statute.
Well, yeah, especially if you disinherit someone in your trust document and they never receive notice, more than likely they're going to get their intestate share of your trust. If you name, my favorite story is that someone named their friends. They had A, B, and C. A was going to get 50,000. B was going to get 25. C was going to get 10. And she came up to me after a workshop series and asked me, will all these individuals know if they're an A, B, or a C friend? And I said, absolutely. Because everybody who's named in that document is going to receive a copy of that document. And this is another reason why you want to keep that trust up to date and don't have 6 to 8 to 10 amendments to your trust. Restate your trust so that it's clear as to who's going to be the trustee, and it's clear as to the distribution, because those are the two most important areas in your trust agreement.
Okay, so someone dies, what happens? A lot of people ask this. So you do have your trust administration, let's say, but you also may have assets outside your trust in your probate estate.
So one of the things you first do is, what is the title on all your trust assets?
It's the first thing we do. Even if we think it's titled in the trust, we make sure by looking up the last recorded deed. That's for real property. But even with your, let's say your taxable brokerage accounts and bank accounts, we want to make sure that if we think they're titled in the trust, that they are titled in the trust. Now, you may have assets that are outside your trust that are in your own name, but they have payable on death beneficiaries. Most your IRAs and retirement accounts, those will usually pass through contract outside of any estate or trust administration. However, if you don't, then if you have those assets and they're over $184,500, your estate will go through a formal probate. And we don't have to go into all that, but that's what would happen. If it's less than that, and this is what usually there's a couple of assets that are outside the trust. Sometimes we use this for safety deposit boxes and things like that. But if it's less than 184,500, you can marshal those assets using what's called a small estate affidavit.
Yeah.
Okay.
Let's go to the next slide. Yes.
Yeah. This is just, we know this, but this is a reminder of what the costs of probate are. They're statutory and expensive.
Yeah. So you're going to name a family member in your trust agreement, and you're going to avoid, hopefully, these probate fees. But the question becomes, are you going to pay your family member?
The question, if you are, then you should probably
Let everybody know.
Let everybody know. And then that particular person that you may choose, that's where a lot of that being organized and having good record keeping comes into play, because even if they're being paid, they should be documenting how they're getting paid and what tasks they're doing to get paid.
Yeah. And this slide kind of goes through the similarities of being a trustee versus an executor in a will. You have to administer the assets. You have to follow the probate code. You have to locate, marshal, and account for the assets. You have to manage the liabilities. The big difference is one is court supervised and one is private. So who keeps an eye on the trustee?
Well, the beneficiaries.
Yeah.
Yeah, they would be the ones that would have the platform to complain or even petition the court. One of the things too is one of the differences between an estate administration and a trust administration is that an estate administration will always begin after the death. So the will that we're probating only becomes valid upon death, while a trust, you can step in during incapacity.
Yeah. That's why for single people, please have a living trust. It makes things so much easier for yourself. Or if you have property in other states, please use a living trust. It makes them much easier to administrate.
And the costs on a private trust administration, I would say, court supervised, you're looking at least 5 to 6%, even more. And almost 2 years now to get through court, where a private one, I don't know, Pete, what would you say, 1 to 2%, not including real estate sale. The people who get the most money out of your trust administrations are your real estate agents. Because they get way more.
yeah. And be careful there too. It's every family has a particular real estate agent. We do not use family members as real estate agents, nor do we use family members' friends as real estate agents. So we use somebody who understands what is a professional fiduciary's liability as a real estate agent, because usually the home is the most valuable property within a particular estate.
Yeah, you have to be very careful with that, because you get a lot of pressure from look, there's even situations where a successor trustee family member is a real estate agent, and of course they want that listing. Of course they want that commission, but that could be seen as self-dealing with with another beneficiary, saying, look, you're going to get a commission on top of your fees that you're charging. So these sort
Or
of
you're
things,
getting a kickback,
yeah,
from the real estate agent. When it comes to money, sometimes families break up over the money issues. So a friend of mine who's an attorney says, name a professional so that you can bind the family, because they'll have one thing in common, and that is their dislike of the trustee. So sometimes it's way too true.
well,
Let's
yeah,
go to the next slide.
Okay, well, let's see. This one, it says, will you ever go to court? You don't go to court at the trust administration unless there's a reason. So like we mentioned before, a beneficiary or interested party can petition the court for, to intervene if the successor trustee is not acting properly. But also the successor trustee themselves may find themselves in a conflicted situation where they may need to ask the court for instructions or things like that. It doesn't happen a lot, but it can happen. I mean, I don't know, Pete, can you think of an example where a successor trustee would petition the court for instructions during a trust administration?
There's a diamond ring in the safety deposit box, which never happens, but all three, let's say there's 3 daughters, they all claim it to be theirs. Mother left it to them. As a trustee, we have no clue. So we would petition to the court for instructions as to what to do with that diamond ring. And of course, the likely instruction is going to be, sell the diamond ring and split the proceeds. But sometimes family members do not agree to do that. So you can end up in court. And one of the things that sometimes happens is, hey, my family is so dysfunctional, they're going to end up in court anyway. So let's go to probate court immediately. Don, you have a question.
There's a question. I think I know the answer to this, but I'm going to ask it as asked. Can trustee also act as real estate broker if licensed?
They can, but
conflict of interest, because they're going to earn a commission, and that's a breach of fiduciary. I would think.
They'd have to. The thing of it is when you're a trustee and a beneficiary, you have to do fully disclose, not just that you're, let's say that you're licensed, but what is your commission? And then you have to get each beneficiary's permission to be the real estate broker. So it's a real conflict. And
on top of that, if they're the broker, but if they're the trustee, they're also deciding what to sell it for.
Exactly.
Because they're signing off on their own deal, plus earning a commission.
It's just fraught with issues. It's not a good idea. That's why we don't use family recommendations as to real estate agents, because if they do, a lot of times they're beholden to them and not to us. And, you can't supervise and delegate to someone who is not speaking to you or feels responsible to you. Let's go to the slide.
We would, on that part, I think what you can do is if you were going to do it, I mean, like I said, it's not illegal, but you would want to send out what's called a notice of proposed action to all the beneficiaries, and then if they all agree, then it's totally fine.
Yeah.
But if there is somebody who objects, then you have to kind of go back to the drawing board and maybe figure something else out. Okay, each one of these bullet points has a slide, so I'm just going to.
Okay.
So now we're kind of getting to the nitty gritty. When you start, you kind of come into a case. So before, someone passes, before we even get the death certificate, a lot of times we are there at the home of the person who passed, the decedent, trying to locate, and there's that word again, marshal, legal documents and perhaps financial statements, tax returns, anything that can help our administration. When I first started this, I remember the first one I did, I took home about 15 boxes of stuff thinking I needed it all. But it, you know, as you do this more, you kind of learn what you need and what you don't need. You don't need old, electricity bills from 1979. Okay. So, things like that people keep, you can, but original estate planning documents, often there's a binder that they may have.
And put it on a shelf. Do not put it in a safety deposit box. Do not put it in a safe at home. I don't know of anyone that will steal your estate planning documents. So it's the first thing county administrators would look for is those estate planning documents if you're still living at home. So those are the docs that your trustee needs.
Because we're going to need those. So when we go to marshal the financial assets, we're going to be taking those documents. And then if, for example, you also may need, if you're not the first in line and maybe there's others in front of you that decline to serve or they've resigned, you would need those letters too. The bank will not let you become, the successor trustee if there's people in front of you.
This is kind of important too. Just because you have named someone does not mean they have to accept.
I thought it was indentured servitude.
No, it isn't. So if you name the trust company, for example, the first thing they're going to do is want to know what the net worth of the estate is and are there any problems. And if it's a low estate value, and I'm saying under 2 million, and there are potential issues, then they'll decline to serve. Sometimes we have individual family members saying, hey, I don't want to deal with my sisters or my brothers, and I decline to serve. So just because you named it doesn't mean that they have to accept. Death certificates, you need originals.
You got to bring them in. People always ask how many should you get. It kind of depends on the makeup of the estate, but
3 to 5.
If you have real property, you're going to have to send in original deck with the affidavit of death of trustee. That's a notarized document. Those go into the county to be recorded. And then every bank, usually when I bring them a death certificate, they don't keep the originals, but they want to see an original. They'll make a copy and then they'll give you back the original. If you need a bond, we've talked about that, and then if you're coming in during a court, there might be some other declarations you need, but let's go to the second to last, the new EIN number. That's a really important step. Even myself, I've walked into banks with the trust and the death certificates and all the legal docs, and then I didn't have an EIN number, so they couldn't help me until I got the EIN number. So you get that through the IRS. You're a CPA or an attorney, if you're using one, can get that for you. It's very simple. They do it all online. The problem is if you mess up the application and it generates, it's kind of hard to unravel it and fix it because now you got to deal with the IRS. So you kind of, if it's your first time doing it, it'd probably be best to have someone else do it.
It's always best, I think, to have someone else do it. If family members don't do this on a regular basis. So they're going to need additional support from the attorney, from the accountant. And a lot of times they're not used to paying $500 plus an hour to get this done, but you need to get this stuff done correctly. And
Correct.
So it's well worth spending those kinds of dollars to make sure that happens, because in your first year of after you die or someone takes over from incapacity, they're going to have to file income tax returns, possibly because your trust is now irrevocable. California and federal on the irrevocable side, and then also for the estate side, you're going to have to file income tax returns. So taxes, The government wants to be paid income taxes. So it becomes very important to make sure that they are completed. And some accountants don't do fiduciary tax returns. So you may have to find someone who is proficient in that area. Yes, Don.
So the question is, if you use a professional, don't you have to line all of them up ahead of time? I'm getting so confused. So we talk about all these different pieces and all these different people. I think the answer...
Your professional fiduciary, or whoever you name as a fiduciary, has to be named in your documents.
Right.
So under your durable power of attorney, 2 or 3 people. Under your living trust, 2 to 3 people. Under your advanced healthcare directive, 2 to 3 people. Under your will as an executor, 2 to 3 people.
So
and
if
they
you
have
were
to be done while you're competent.
So the key in this, in my mind, might be, from the question standpoint, if I'm going to use a trust company or a professional fiduciary, I don't need to worry about all these other people. If I'm naming my son, or if my son named me, whatever it happens to be, then I better figure out who these other people are, because
you'll be
well,
you'll
I'm still
be
confident.
able to, or the individual that you named, a son or daughter, has to find competent people to delegate some of these jobs to.
So then if you were going to appoint a family member, it might be gracious of you to figure out who those people are and give that to them to say, hey, this is an attorney we've talked to, this is this, and have that available.
Exactly.
If you're going to name a family member. Otherwise,
very good suggestion, Don.
You're setting them up for almost failure.
Yes. Let's go to the next slide.
Okay. Before I go, just for the estate, in order to do anything, you would need those court certified letters of administration. And then when you are marshaling assets for a trust, either you will have this, or the financial institution will make you do a trust certification, which basically is an abridged version of the trust without all the dispositive provisions. And
to go back to Don's previous question, all these documents that we talked about, the will, the durable power, the advanced healthcare directive, the living trust, gives another person legal authority to make decisions. So that legal authority is what you're giving to that individual, and then they go out and delegate and do their job.
The tasks on these next few slides, we won't go through every single line, but they kind of encapsulate what needs to happen at a certain time. One of the things is, a lot of people ask about a trustee is, are they responsible for the funeral and burial? And the question is, it depends on what if there was any prearranged plans, or but remember, when you did the advanced healthcare directive session, that agent for your advanced healthcare directive has the legal authority over the disposition of your remains. Now, if that's a different person than the successor trustee, then they're going to have to work together regarding this side of things.
Okay. On our website, just below this particular session, we have a lot of articles on what it takes to be in a estate administration. And we go through an entire list of tasks. This is just an abbreviated form that we're showing you. It's just some of the things that we'll need to do. Talk about locating important papers.
Yeah, let's talk about that, because there's more than just banks and money. Insurance is a big thing that's often overlooked in a trust administration. Let's be making sure that all the assets are insured. Your home, for example, often someone will die, and but from the date of death to the time they actually sell that home, and it's vacant, that insurance policy that the person had when they were alive may not be valid, after 30 to 60 days of vacancy. And so the trustee really needs to understand that and work with their insurance agent to make sure that the home's insured. And if it does lapse, then they're going to have to get another, perhaps even a vacant house policy, which can be more expensive. But it has, no one's going to complain, or you're not going to get in trouble for buying insurance on something like that. You're going to get in trouble if you don't get insurance and something happens and you can't make a claim.
Yeah, trustee is going to be held personally liable if you have a fire and you don't have insurance.
I want to clarify one thing in this. So for the sake of discussion, Pete or Trevor, either one of you, I'm going to hire you as my professional fiduciary. And I'm going to name you, and I'm telling you this in advance, and I'm going to tell you that it's in my trust and will or whatever other documents. But I'm still alive and still quite alive and kicking, I think, as you had said in one of your slides. Do you charge me anything for having your name on my document until I die or become incapacitated?
The way we practice, no.
There are some individuals out there that will.
A trust company?
We think it's unethical.
A trust company?
Trust companies, no, they shouldn't. They have no liability, and that's the issue.
Yeah, you're not doing anything yet. So
yeah,
you're not, okay. You shouldn't, I think that wouldn't be ethical to charge people, but people do. You just got to ask first. Yes. Often the trust companies won't charge you, but they will be you'll be on their target list to move everything, all your assets to them while you're still alive. Yeah. So you'll get a lot of mail.
Thank you.
Then okay, so insurance too, auto, like one of the hardest things to deal with is vehicles that drive off the property, because just the beneficiary takes the keys and leaves with the car, and that should not happen. I mean, you should you should first of all identify where the keys are and have complete control over that.
Yeah. One of the things we normally do is change the locks on your home. So the beneficiaries cannot get into the home, because many a times we find things are missing if we don't get the key and change the locks.
Yeah.
If you're in a caregiving situation, workman's compensation is huge.
Yeah, that's where a lot of people also they look to save money by hiring unlicensed caregivers or unlicensed contractors, and that increases the trustee's liability by a lot, because remember, they are responsible for any issues that may come up. Your medical insurance of the decedent will go away when they die, so you don't have to worry about that.
But just to comment on that is that a lot of times we receive medical bills 9 to 12 months after the date of death. So, do not worry during the time of paying the bills immediately. There's no rush. You've been deceased, so, most times that's not going to be an issue. Brokerage statements, promissory notes, real estate documents, safety deposit box. Any comments?
Yeah, just you got to marshal them and understand if they're still valid, and you need to deal with them. Often you won't find the safety deposit key, but you'll find a safety deposit, let's say line item, in one of the statements, and then you realize, oh, there's a safety deposit box. Understanding how everything holds title, very important. Oh, leases too. Often you may the decedent was a landlord and didn't use a property management company, so they may have the leases that you need to understand if you're coming in to take over and start collecting rent. Yeah, and understand the trust. There may be, the way the trust is written, you may be funding a sub-trust and perhaps a special needs trust.
Please don't put one child as a trustee over another child. It just, all they will do is talk about money, and it'll cause all sorts of headaches.
It does. It affects the sibling relationship.
Yeah.
Because it becomes a gatekeeper, key holder kind of situation.
This particular slide just talks about other professionals that you're going to need.
all that you're going to need most likely. So be prepared to delegate the task to them. Notices, we've already talked about the 1606, that's a 120-day notice. The 16061.7, that's after the probate code. You can Google that probate code and read exactly what it says. When you are filing tax returns, there's certain tax power of attorney or fiduciary relationship, they call it. That's the Form 56. So the IRS knows that you are acting as a fiduciary for the person that is filing the tax return. So these are all things you got to kind of consider. Creditor notices, that's mainly in probate. There's an abridged 4-month creditor notice period, but in a trust administration, that actually is up to 3 years. Okay. This is
I'm
a
just
slide
holding
on,
up the probate code book. Just people think that being a trustee, they don't have to follow the code. And if you got more than one child, that trustee better follow the code. If you're an only child, or if you have no kids, then maybe you can get away with some stuff. But other than that, you want to follow the rules.
okay. So when we're marshaling assets, we're also marshaling real property. You know, Pete talked about changing the locks and making sure that all, like, the gardener's paid and everybody is, you know, so you're securing everything and all the contents inside. We're also marshaling the financial assets and the real property. We're changing the title from the old decedent's name as trustee to the new trustee's name. There may be income that's coming in. You know, Social Security will stop at death. If you don't tell them that, they eventually kind of find out. But some of these types of income will have to get clawed back after date of death. So it's best just to tell them as soon as possible. Also, Pete, why do we need a date of death value for all the property?
Because all the assets receive what's called a step up in basis. And so it has to do with income taxes. It also has to do with fees as to what an attorney sometimes or a professional trustee will charge. So and the beneficiaries, all of them want to know what is the size of the estate at a date of death, and what is the size of the estate when it finally gets distributed? Where did the money go?
Yeah, so that's sort of the beginning date of your accounting of your irrevocable trust. So we want to know the value of all those in the cost basis. So as Pete said, if we are selling, let's say, any of the let's say real property assets, that'll be our new cost basis. So any sort of capital gains will be mitigated as to doesn't matter how long ago the decedent bought it, it'll all be stepped up to the date of death. So we get, you know, certified appraisers to do this for us, but you know, you need something. So people always ask me, do I have to get an appraiser? Well, you need something to value that at date of death.
Yeah, they have professional real estate certified appraisers. If there's you know, if it's in a very suburb neighborhood where, you know, and the beneficiaries understand the price, you may not need a certified appraisal. It depends on the situation, but everybody wants to get what's the highest possible price for the house.
Yeah.
Okay. We've got about 5 minutes left. How many slides do we have to?
We only have probably about 3 more slides.
Okay.
That are relevant to this. So in regards to fiduciary investing, Pete, often when you come onto a case where it's just distribution, we will liquidate
and put it in a bank account.
Put it in a bank account to get ready for distribution. Some people will say, well, what about dad's Disney stock? He had he bought, his grandfather gave him that, and now, you know, I want to inherit the stock in kind. Can you do that? I suppose you can, but it doesn't really.
Yeah. You know, it's what if it was Enron stock, you know, and just, you know, it was a value at the date of death, and then 3 weeks later it plummets. So most times we have to follow what the instructions are in your trust agreement. And if it's not in your trust to keep it in kind, then we need to sell it and diversify, put it in cash. It's not our stock. We're just a temporary in charge until it goes to your beneficiaries.
Yeah, and you can buy it back. It's okay.
Yeah.
We're going to sell all, you know, the real property and put that into an account, you know, a sort of a distribution account that we're going to use to when we finally distribute the assets. So all that, we're kind of consolidating all the assets and the proceeds into something that we can distribute in an easy manner.
Yeah. For long-term trust, we follow the prudent investment rule, and we hire fee-only registered investment advisors to manage the money. And so we're not long-term advisors. We hire this out for a competent professional to manage that money.
Prudently delegate.
Yeah.
All right. Okay. So final distribution. Now, this is also a very important step that often you would kind of want the attorney, if you've hired an attorney, to kind of take the lead on, as far as drafting final distribution letters, making sure the accounting is up to snuff, and there's nothing wrong with it. And then we have to hold back a reserve. That's what a lot of people don't understand. There are going to be some ongoing expenses, so you have to appropriate that and say, okay, well, should I hold back 10,000? Do I need more than that because maybe the person hadn't filed tax returns in 5 years or something? So you have to kind of understand that that's going to happen, and you have to tell everyone that's going to happen, and that's going to be in your final accounting and distributions. And you'd want, I don't know, the different attorneys do different things. Some have big waivers, some don't, but you really want to be protected in this stage of the trust administration.
Yeah. So you want everybody to waive that they can.
Yeah, I think Pete froze. He looks frozen. So
personally, I think we should make a picture of that. Just hold it for him to give it to him later on, because I think so now that we're approaching 11:30 and we're ending, I don't know if you want to say anything else on these, or we can wrap up at this point.
Well, we can. I mean, the next few slides, you know, if you're married, it's pretty simple. It depends on how you hold title, how that's going to transfer. So a lot of what we talked about today was mainly upon the surviving spouse's death, right? You know, what's going to happen. You know, regarding how long it takes, remember, probate can take 2 years. A quick trust administration, given that there is a 120-day notification period in there,
right,
can take between, I would say, 4 to 6 months would be very fast.
Yes,
but they often go about 8-9 months or more. So it's not immediate, even though you're not going through probate.
But I want my money now.
Well, I wouldn't distribute any money during the 120-day period. However, after that lapses, it's possible to do what's called a preliminary distribution,
right.
To kind of, but we still got to make sure that we have enough money for the expenses of the administration.
Darn, Pete, we were having a great time here. We were making great progress.
Yeah. Okay. Then the last 3 slides, you can all look on your own. It's basically what is a California licensed fiduciary, the services and the benefits of having one of us. But that's not really the scope of this session. So,
And I think the key in all of this, and you said it at the very beginning, this is not being done, one, to scare people, or two, to say, hey, gee, this is what you have to do. It's your call on how you want to handle it. The thing, my argument frequently is eyes wide open. Understand what you're doing and what's ahead of you and what's going on. If you say, I'll be the executor of my sister's estate, assuming she doesn't kill me first and whatever, then I have to be aware of all this stuff, even though there's no contention in the family, it seems, but all of these steps have to be followed. And that's as an individual who's aware of a lot of these things. And so that's where some of these go on.
And I've seen the worst draft documents. I've seen family in disarray, and everything works out because everyone just wants to have the money and move on. And so, so don't fret if you have a larger estate, if you have more than 2 or more children, then you may want to consider someone from the outside being a trustee. There's one other question.
No, it's the same. Thank you very much for the workshop. So we're good.
Okay, great.
So this is financial and estate literacy. This has been It's Your Estate. We've been discussing estate administration. Yeah, dunce dingy. I think Trevor, Pete, in terms of what we are, this is the last week. So we're not going to have another one next week. So you got to find somebody else to watch.
Yeah, by the way, we offer free get together with anyone who has watched the workshop. If they have a question on estate administration, Trevor, Richard, myself, we'd be more than happy to meet with you. There's never an obligation. There's never a charge to help you out, to figure out what's going on. So thank you for participating. We couldn't have done it without you, Trevor. Great job. Don, as usual, awesome. By the way, just a plug, make sure that if you go online at Financial and Estate Literacy, Don has prepared an entire estate planning booklet, and it's a real good summary of the entire of the session.
About it.
Anyway, thank you guys.
Thank you very much. Have a good time.